Can you please explain the wages versus corporate profits slide and how that feeds into the quads and expectations of possible quad rotation?
Yeah, really important question there. If you guys go, we're going to go deep into the deck. This is the most important thing that I was alluding to when I was talking about GM. If you look at corporate profits versus labor, which we have on slide 76, guys. Okay, so this is one of the most basic relationships in finance and in America. And again, this is another interesting part about what I just went off on stocks and profits and stuff like that, right? So let me just doodle for you here a little bit. Here we'll go. We'll go with blue because there's no blue in this chart. Okay, so U.S. recessions are the red bars. See these red bars here? This is a red bar, this red bar, red bar, red bar, red bar, red bar. If you're new to this business or measuring and mapping and you just kind of like roll the bones on stocks, let's start with where recessions are and where growth accelerates and where labor accelerates, okay? Labor is called late cycle. So 100% of the time, these red circles here, this is labor, the gray line, employee compensation against capital. The black line is what corporations are getting paid, their profits, okay? So look, in the early part of the 1970s, labor peaks and rolls throughout the recession. In the mid-1970s, peaks and rolls throughout the recession. Peaks and rolls again, 1981. Bring on Reagan. All right, then we go into 1991, peaks and rolls into a recession. 2001, peaks and rolls into a recession. 2008, peaks and rolls into a recession. Drum roll. Peaks where and rolls into a what? Ah, alas, the question we all have on our minds. Why should we ever have a red bar ever again? Why am I sounding like Gladiator, Braveheart, or whoever? I don't know, and you don't either. The only thing that we know with 100% certainty is that labor's going higher and corporate profits are going lower. Got that? Comprende? Yeah, you got it. All right. Now, what's fascinating about all these other times is that you don't have to watch Braveheart or Gladiator to know that the black line goes here 100% of the time, just like this. Look at this. How consistent is the black line going down? Now, what could possibly go wrong? The black line is up here, and it is going to go down there when? Okay, so this is essentially the most important point that I'm trying to make that is squarely on the screws going to be realized in all of its glory in the next 6 weeks. Earnings are going to be negative year over year across the board, not in every single sector, but broadening. And that's going to be where we see the whites of the eyes on these things. That's why, actually, the workers at GM have leverage. GM corporate profits are at generational highs. The people want to get paid a piece of that, okay? That's the struggle. That's the inequality debate. That's what it is. It's all part of the cycle.